This meeting is being live streamed as you're listening to the matinee edition here on this lovely Sunday in Georgia. I don't know how you guys are living, but the Bags family is out here thriving. How are you, GP? How are you, Nick?
I'm great.
I'm good. Yeah, I'm pretty damn good. Took a while for all of this to kind of work out, but it's nice to see that what you learn over a decade plus that it actually makes sense. So it's nice to feel that validation.
Yeah, well, I mean, as always, we have some pre-talking before we hit the record or the live button. And yeah, I mean, right, we've been waiting for this to move up. We've been chomping at the bit to get it, but I still think I'm not saying that it's going to fail. I'm still saying there are opportunities above for it to fail. So I just tend to be a little more cautious. Maybe that's me being a sucker from not being able to trust any move here in 2022. But yeah, I'm still waiting for Bitcoin to fire off a full risk on. Nick, you brought up earlier a conversation that you saw on Stock Twits, right? That other risk on indicators are going. Maybe you want to touch on that just for a sec.
Yeah, sure. I mean, just like historically before we've had the crypto space to kind of play in, it was largely the IWM that was kind of like the main the IWM and the IBB, like the biotech stuff. Like those were kind of our indicators that it was like, risk on.
And IWM, first off, I mean,
yeah, the IWM.
I looked at that on Friday. Just looks awesome. Like it completely broke out. Like you got this full on RSI breakout. You've got a full price action breakout, and you don't really hit anything until up in this like high 2 teens level that shouldn't give you any problems.
Yeah. It's got plenty of space too for like, the 10-week line is obviously curling under price. There's still a ways off from curling back above like the 200-day moving average, but I don't know. Yeah, I don't know where we were going with that, but
no, you were saying when I was talking about Bitcoin firing off the full risk on, I think you said Duzio and maybe somebody else.
Oh yeah,
talking about XBI and IWM being the better indicators. I mean, we've been talking about XBI for a minute now. That looks full on inverted head and shoulders. I hate to call them that because I don't trust chart patterns right now, but I mean that looks like that's set up to do that right there pretty easily.
Yeah, for sure. Where I disagreed with, not necessarily disagreed, but in that conversation, Duzio and somebody else were talking about XBI like in the kind of like low 100 range. Like I think the XBI, like I think we get a good one teens to 120s out of the XBI.
Oh yeah.
I don't know. I guess I don't know what's really to come. I'm just bullish until kind of some of these measured move patterns overall complete. So it's tough for me to really
or just completely reverse hard. Like a huge failure.
Yeah, totally.
Would change as opposed to running into a resistance.
Yeah.
So anyway, where I was taking it with the Bitcoin, right? And I'm gonna throw Bitcoin back up on the screen. I mean, Bitcoin's been in this, downtrend, RSI downtrend. This was off the lows and it undercut the lows on the RSI. It still has some room up, right, to hit that trend resistance there. But as I've said, for months on end, Bitcoin just isn't bullish until it goes over the weekly 20. Like it can have a bullish setup, but it's not full bullish until we get 28,500 right now, basically. A close up above this 9 EMA would be great. That would be a good sign, but we're not going like full ham, in my opinion, on risk on Bitcoin until we get a couple pieces of resistance knocked off, and that being the first one and that being the second one. But no, I like the setups. GP, you were saying it feels like some validation, all the things that you've learned. I know you're bullish. You've been bullish. You stay bulled up, Mr. Frothy GP. How are you feeling? I kind of got the sense that it wasn't full ecstasy after the way the week closed, maybe.
So I don't like when things close at highs or at lows. That's just me, right? That's usually code for market. We're gonna screw you, right? Like that's just usually. And with 2022, we built this muscle memory of failures at key resistance points and all that other stuff, right? And we incrementally made a new high from that cluster in the Qs. I think the high, what was that? The three kind of gap downs right at the big end of April, right when China started to shut down. I think the high of that range was like 230.29 or something like that, and we made a new high by 230.39, right? I don't like that. I do like that on Friday we gamma squeezed above the gamma level of 330, which was really nice to see. We haven't seen, that's a character change, right?
Yeah.
Like 2022 has been negative gamma
Yep.
and accelerating to the downside on Fridays. So what's happened this week? We had an acceleration to the upside to take over a gamma level that we haven't done in 8 or 9 months. Like, fine, we fail, but if you're not shooting your shot here, like, what are you doing? What are you trading? What are you? Fine,
Right.
you can come at me and be like, hey, your call was terrible. But if you're not in this market trying to get long here, or even like over the last 2 months that I've been telling you that we've bottomed, we like, what are you doing, right? Like
Baby,
that's
what
my
is you doing? Right. Yeah,
yeah.
exactly. Baby, what is you doing?
Right. So like, and all I see now is every single bull from the last 8 months started to turn bearish right around that. We talked about this in mid-June, right? Right into that CPI where we had that three straight days of gap down 11% in the index, not a stock, in the index, right? After like a 30% move down, small bounce, and then straight down for 3 days, right? With no questions asked, unadulterated, just bent over, screw. Like, it was nasty, right? Sentiment washout, right? So
Grab your ankles, wash out.
yeah, and you didn't have volume washout, but man, the sentiment washout was great. And since that kind of period, now every bull that has now turned into a bear is now looking for the opportunity to short. And what's happened to them in the last 2 months? Every opportunity to short has become an every opportunity to get long. So they have conditioned you to become one way, and they are showing you that they're going the other way. So, as we were talking about risk on indicators, first started with, if you pull up the XBI chart, right? Just real quick.
Yep.
So what happened here, right? If we're looking at this XBI chart, in 2020, we had this massive move down, right? In 5 weeks, no questions asked, just sell everything. What did we do in 2022? We came back and we retested 2022 lows, essentially, right? On what? On volume. Where's the volume? On the bottom retest, not at the distribution through the entire arc, but at the bottom. So what is that telling you? That while people were selling and worried about crap, people like institutions were heavily
buying.
Stepping in, right? So it's a red bar, but that is institutional volume coming in and saying, we are good. It even gave you the technical retest 2 weeks later, right? You got the double bottom, and then it moved higher. So as I've been posting this chart for a couple of months now, but technically XBI is acting exactly how it should. It's been moving up, consolidating, letting
Yeah.
moving averages catch up. Like, if you're not paying attention to the price action here, I'm not sure what you're looking at. You can talk about, oh, the market's going to screw us because it screwed us in the past before. But this price action is telling you that's not what's happening here. Maybe they fail it here. Maybe they don't. I don't know what the future holds like, but I want to be long at least until, I would say, the end of this month, even end of this quarter, and see what happens here, right? I think there's a lot of people out there who got bullish, right? Good traders got bullish in June because they saw that gap down, they saw that sentiment wash out, and they were like, dude, it's time to get long, right? Like, these are things you pick up when you've been trading. Nick, I'm sure you realize that too, right? Like, this is a moment to start looking for if the price action starts behaving in a different way than it has been.
Yeah, absolutely.
Right. So in June, but like, people have been doing this for a long time. They know it. This is the experience. This is the stuff that you can't find in the books because they won't write the stuff in the books. This is the stuff that gets you paid, right? Like, they'll tell you about moving averages and stuff like that, but they won't write this stuff in the books because this is the stuff that comes with intuition. This is the stuff that comes with.
So we did mention that last week, right? I mean, that was one thing that our good friend Zach was saying. Yeah, you guys said this in March too. And I was quick to step in and be like, hey, this is a change from the entire setup of March. Like, this is a character change. This is a different way that the price action's going about it. So in my mind, that's where I was at. But then, right, we see all the bear thesis out there. The first one that you're probably going to see if you're rambling on the stock twats is, yeah, we went higher highs, but look at volume. It was actually the lowest volume, all year long. And it's like, all right, you can take that one. And well, we got stopped out like just above, the 50 SMA or. So there's still 1,000 reasons for bears to try to scare you out of your positions and to scare you to sell. But I would just say right now the trend is higher, right? Like it's obviously higher. That doesn't mean that the trade higher is easier, but I don't feel like it's a low risk short or bearish scenario right here at all.
Yeah, I agree, right? Like, they're even showing. Go ahead, Nick. Sorry.
Oh, I was just saying what makes it difficult to be, I don't want to say bullish here, but for guys that have not been long or to not have positions on, you're gonna feel like you chased right here, and you're basically we're halfway into a move where we're all saying like, yeah, it looks like we're going to move higher, but the place to be bearish is significantly higher from here. So it's either you had to be long or you have to kind of sit and wait for like better setups because we need to pause ultimately.
Yeah. I can understand the person who hasn't put money to work at all.
Yeah.
Over the past 2 months, right? Like I totally get it. I understand. But at the same time, if you're trying to put on a trade right now, to me, the trend is still higher. And that's something that you're great at, Nick, right?
Yeah,
is riding the trend. Why would you want to try to step in short right here? Like it just feels like that's waiting to be run over by a bus.
Yeah, I think price like on the indexes, like the Qs and the SPY, like we're above the 30 and 40 week moving average. We're not quite above like the 200-day per se, like there's like a variance in like, price between the two.
We're above the 50 week on the Qs, no?
Yeah, we
are. Yeah. That's what I'm saying. So like it wouldn't pay to be, I don't think it would pay to be long-term bearish right here.
And so like to add to that, Nick, is like, okay, I hear you, right? It's been a miserable 8 to 10 months. I'm not arguing it. There's been a lot of Dude, even Thursday was miserable. They gave you the breakout until
I
11
know.
a.m.
Yeah.
and they faded you to hell all day long. And everyone's like, oh, here's the reversal. Here's the top. We're done. And
I don't know how many people I saw on Thursdays like it was the top. It was
Yeah,
the
I know.
top.
Right?
That
Oh,
was
look
kind
at
of one of
that.
those intuition things you were talking about. I'm like, dude, I don't know. This isn't how this is gonna go. But anyways, go on.
That's the whole thing, right? I talked about it on the IWM. I posted it on like Tuesday. I was like, oh, look, the obligatory 200-day moving average resistance, right? And I think it's going to bust through. And what happened? It bust through. It's in a supply zone. For all the conversations of we are overbought and we are through the roof, let's look at the chart. Pull up the Qs, right? Like I understand your indicators are overbought, but let's take a look at where the Qs are, right? Let's scroll back to up to 2022, right? Started is we are exactly where we were in April, right? Like this is where we were in April. And this is the third or fourth test of the 200-day moving average. Now, I think what you should be looking for is moments when we have resistance and we do pull back is to get long, not short, until these things start to fail religiously, right? Like we failed the 200-day moving average. It's not an opportunity to get short. It's opportunity to watch the price action, right? Like this is what active traders and swing traders are looking for. So yes, we did fail, but what was the result of the failure? It wasn't a move lower, it was a move higher. So take it like I know like people draw trend lines and I know trend lines are subjective, right? So but like this is the piece I wanted to share on StockTwits, but I was like, you know what, I'm going to talk about it on the call because I think it's a little bit more, it needs a little bit more color. Is like when you draw trend lines, it's not just price and points to me, right? It's also against daily pivots and monthly pivots and weekly pivots, right? So when you start getting trend lines that align on monthly, weekly, and daily timeframes, those are really powerful, right? Those are the ones like this is, we've talked about this a lot, right? Nick, it's multiple time frame continuity. So when you draw a trend line, let's say you draw it on the daily, then expand to the weekly and check out the weekly and be like, hey, does this also line up with a big downtrend? Oh, okay, cool. Let me see if this also aligns with the monthly downtrend, right? Or uptrend or whatever you want to do. Right? So this is what you want to see.
It's like magic.
Yeah. So like that's the thing, right? Like the trend doesn't happen over a day. It happens over a period of time. So I hear you. You want to short here. And you'll have your key shorts, right? Like you could have shorted on Thursday, made a buttload of money because everyone was happy long, and then everything flipped. But you have to be an intraday trader to catch those things, right?
Yeah.
Like if you bought puts on Thursday, on Wednesday going into Thursday because you thought it was going to fail. You got smoked. No, you got smoked. You had to buy, like if you're actually looking at IV and look, VIX is not barely moving, right? VIX is actually going down. So your implied volatility is getting crushed. So even if you bought puts going into Thursday because PPI was coming out, going to Thursday, PPI was coming out, it was inflated on premiums, and that type of move would have resulted in thousands of percents, but you didn't get that, right? You probably got like 50% or 100%. So the risk and reward is just not worth it because. So that's what I mean by like perspective, right? So I'm talking about on the index here. I'm not talking about necessarily individual stocks because they can move 10, 15, 20%, whatever, right? I don't really care about that, but I'm talking about index here, right? So, and that's how that's how long-term traders or investors handle their business. They buy puts and indexes. They don't buy indices. They don't buy them in individual stocks. So that's the way you have to kind of look at the markets. My personal opinion, but I can go on for a long time. Plus, my trademarked Dem put, not Fed put, has been holding for 2.5 months. And my whole conversation is this is the conspiracy side more than the technical side, is that the Democrats weren't going to let their market die going into a very critical, midterm period where they need to get elected. And, it messed around that 280 level for quite a few months, but it's now starting to push up. So I'm still bullish into midterm elections here and there. I like what I don't understand is I was talking to my wife last night. We were driving somewhere, and the conversations of 2008 are still pretty rampant. And I wanted to ask you guys a question: is like, to me, I was talking to her, and I was like, 2008 was the conversation of a global financial system in the middle of a potential collapse, right? Like people losing, like going Citibank. I believe at the time was critical for bankruptcy, right, Nick?
Yep.
And at that point, I think they were holding 300 or 400,000 people employed globally, right? Like not because Citibank is one of 6 banks that's global, I believe. JP Morgan is actually not one of them. They're a US bank, but Citibank is actually global. And you had the risk of Citibank going under. I think it hit like 69 cents, ironically. Elon would be happy. But that was a 400,000 people job globally company that was about to go under, right? Like you were talking about big implications across the world. And people are comparing that to 2008 because the chart looks the same. So I wanted to ask you guys what you thought.
First off, I have proven this previously with my random shit posts that I can make an analog of any time period to make it resemble any other time period. So we can line up candles and make that happen. I've proven it. But no, we are not in the same time period whatsoever. Is inflation high? Yes. Are there, global geopolitical factors at work? Yes. But is the entire global economy on the verge of meltdown? No. 2008 was way more severe and had potential to do way more damage than whatever we have on our radars right now, in my humble opinion.
Yeah, and so excuse me, and Nick, I'll let you talk in just 1 second. One more point was like 2008 bottom would have been a nice bottom when it was potentially bottom, but the second leg kind of dropped, which is Lehman Brothers, right, in September. Yep. And that's what caused that reacceleration of the downside move. So if you are thinking this is going to be like 2008, you're going to need that catalyst to get that. And I can guarantee you that I'll post it if I think I see that catalyst, that second leg is coming, right? So until then, it's just a run of the mill correction, and we had brutal correction. Anyway, Nick, your thoughts?
I didn't have anything to add really. I mean, I try not to listen to too many headline thoughts in terms of what's happening out there. It makes kind of just trading the charts that much easier. So
agreed.
I mean, you guys
this
know
was about saving the little guys, right? I think that's where it comes from for me, is like, dude, I understand what Goldman Sachs is reporting out and what every FinTwit guru is telling you about price action. But let's take a look at what's actually happening in the price action. So that's the perspective I'm looking at, right?
Sure.
So, I mean, I know the saying is history doesn't repeat itself, but it often rhymes. And that's great. History does do that. And we can find chart patterns and candlestick setups and similarities in a lot of, uptrends, downtrends, just market behavior. And to me, I'm not saying this can't play out. I'm not saying that can't play out, right? It totally can play out. But if you look at just look at it, it's not the same, right? Like it's like, well, this is the monthly candle here. Like it's just not the same. Are you saying this right here is this right here, right? Like it could be, maybe, but I don't see it. And from everybody who's been pulling out these analogs, they say we're more here, right, than we are here. Like this was months ago.
I disagree with that. I think we're in a much more bullish. I think we're in a much more bullish setup right now than we are anything. I think if we get another, like I think if we get another, like, this leg down that we're all waiting for, or not we're all waiting for, but that a lot of traders are expecting. I think the way we get that now is either a rollover and a retest of like a major pivot, which was, like a couple weeks ago, or we roll over and, like, let's say test the lows and then double bottom out of it.
No, I think we agree, Nick. You're disagreeing with the people who I'm saying think this, I guess.
Sure.
Yeah, no, I don't think that that's a likely scenario at all. I just, yes, we can make analogs of things and it's cool. And our human ape brains or salamander brains are known to want to make patterns out of everything. We just see things that aren't there because that's how our brains work. No, I don't think that there's similarities that lead me to think that this is 2008 all over again. Yep. Oh, here's Zach. Analog bullshit. Bottom is unlikely, but pullback coming. Dollar and VIX look ready to bounce soon. Analogs are fun. Analogs suck, Zach. But yeah, no, I mean, yeah, could we have a pullback? Yeah, I think we're all saying that we're not going straight to the moon from here. I don't think any one of the three of us has said that.
I might be saying that.
I think we're going straight to all-time high V bottom right here. GP.
No, I think it's a possibility that we're at all-time highs before people can even realize we're right. Like if you're looking at the chart patterns underneath, let's take.
I mean, we're 24% from the highs, right, from here.
Right, and I understand that, but take a look at some of the charts, and I'll go through them in a second. Right, so
I was just using it as a point of reference, not saying that it can't happen.
Yeah, so like if you're looking at Google, right? Google, if you pull up Google here, this is one of the mega caps, right? For 3 months, 4 months, it's essentially created a rounding bottom off of a big move higher, right? This is a consolidation pattern. This is not a breakdown pattern as of now, right? This is a rounding bottom, cup and handle, and it hasn't even moved, right? You're looking at, this has been sideways. So like if these guys start to participate, and if you pull up Amazon, look at Amazon as well, right? Take a look at Amazon. Retested the major base from 2020 breakout on volume, started kicking in, and it hasn't even reclaimed the pivots here, right? Like it's still rejecting 144.60, which is the gap down high from the earnings a couple earnings ago when they reported a $9 billion loss because of Rivian, right? Accounting gimmicks and whatever, right? And volume is starting to decelerate. I see that on the weekly there, but this hasn't even participated. But yet, once again, it's a rounding bottom off of a base breakout and moving higher. So if these guys start to participate, I think the potential of and obviously we all know Apple and Zach short Apple.
Look at Apple. Apple's like a gnat's butt hair from being at all-time high.
Right. So like this is my, for as long as I can remember. I don't think it's the bull market leader, but Apple is the market leader, right?
That's
like
right.
It decides if it's going up, the market is going up. If it's going down, this makes sense because it's part of so many indexes and so many other people. Like it's risk on, right? So Apple's another one. Look at CRM, right? You're pulling up CRM. Right?
I mean, look at all these setups. They're the same, right? Like I can go through whatever ones you want. Like here's Salesforce. Here's Sentinel-1, right? Let's go back to Google, right? Like it's the same, like it's ready to go. Bing.
Dude, and what do we talk about with Netflix?
That Reed Hastings is your dad.
Yes, he's your papa. No, but reality is Netflix leads bull markets, right? And so we talked about this in January, which was if Netflix dies, the market dies. And Netflix died, the market died. Now, if Netflix reverses course, which is pushing up, and I think Netflix is a terrible trader, so it could potentially fail here because everyone's like, oh, it's in the gap. It should fill $150 gap in 3 days, right? Because that's how people work. But this is telling you that the bull market is kind of active and it's starting to push forward. So if you were following the trend based on where Netflix is going, then the trend on where Netflix is going here is suggesting it's higher. And this is still what 50%, 60% off the highs. Like I don't think it's
telling you
going
put money to work down in the 170s or 80s, and I said I would wait till 220 either way or 210 either way. You're sitting at about 20% or 42%. So whatever.
I just was looking at
on a roll.
I was just looking at my last buy on Netflix. It was 166 something, or 167 or something like that. So like I don't talk about like my entries and stuff quite often, but this is stuff that's this is stuff that you need to be watching, right?
Somewhere through here, you said that I mean, on the pod, you had said you'd put money to work somewhere along one of those lines right there. So that makes sense. I mean, anyway.
It's so like
trying to put your business out in the street, GP.
Yeah, no worries. But this is so like for me, like the ultimate point I'm watching here is if you pull up the cues again.
I'm getting there.
Yeah, no worries. So when we started this pod, we were talking about the capitulation in January, right? That January 24th low, which is 334, 335. That was a massive volume. What we thought at the time was capitulation. Obviously, we needed a sentiment capitulation, not just a volume capitulation. So that's the point where I'm watching on the charts this week. This 335 level, right, on the cues. And it's been on my radar ever since the bottom was like, that's the one that I'm kind of watching because that was a weird kind of green candle everyone bought. That could become pretty good resistance because they finally got to break even. And like it's counterintuitive, right? They're finally break even after 7 months of holding. That it could cause a kind of big resistance point. Hopefully it's a small one, but that could be the bigger resistance point. So that's the one
I like the confirmation here, right? You have a test, a failure, a test, a breakthrough, a test, a failure, and then back through, right? So I like when you have confirmations of those types of support. So I mean that level makes a lot of sense.
So that's like if you're on this week and you got net positions, if we start to see resistance around that level, obviously it's 2022, so they can just gap it down on Sunday and crush everyone because that's how 2022 has been for the most part, except for the last couple of months. That's the level I've got on my watch for this week because there's just a lot of volume there, right? Like the volume profile people, if you're watching, that's the place that I'd be looking to see how price action.
You saw me pull up the volume profile. I want to see what it looked like right there.
Yeah.
So, and Nick, I'm gonna let you jump on this a little bit. Our good friend Zach wants to talk a little bit about Apple. He wants to talk Apple, and I don't know, Nick. We've talked about all these different basing and breakout scenarios. Well, Apple just kind of went down, and now it's again at a whisper of being at its all-time highs. What do you make of the Apple setup?
probably the same way I view the markets generally. I think if you're long currently, I think you sit tight and you let it, I don't know, you got to give it room to breathe right here. I think you have the gap that wants to be filled between kind of 173 and 175. And then you obviously have like the all-time high kind of resistance up there. So
This one right here, what you're talking about?
yeah. So I think if you're long, I think you sit tight. And I think that you hopefully are sized and long from under 160. Cause I think
from
like
lows,
I think that's kind of where you want to give it room to. Like the 20-day moving average is there at 160. The 50 days, lower at down by 149, 150. So I think that as long as I don't have a position in Apple, but I think if you do and you're currently long, I think you sit tight. I don't think you are looking to get into a new position right here.
No, and I think GP really summed it up well, is while Apple is the market leader, it's probably not going to be a market leader, right?
Sure.
In as far as what you can probably expect in short term from gains, because this doesn't look like any of those other charts that we had earlier, going back to Amazon.
Yeah.
Pull up the weekly, right? We've got that basing structure, Google, Microsoft even, right? Microsoft even has that same sort of, Microsoft looks really good.
Yeah.
But anyway, I tend to agree with what you're both saying there. Zach's just impromptu hitting us with questions now. I know you guys are technical traders, but would love a show discussing your favorite long holdings. I think we do that a lot. I think we talk about what our favorites are a lot. Zach, obviously Netflix, Tesla on GP side, right? Am I missing anything else there, GP, that you want to shout out?
So I've been obviously talking about Netflix is one of them. Tesla. I also like Zoom a lot, right? It's been crap for many years now, but they're a cash flow machine. I think at some point either they get bought
Similar
out.
setup here,
right? I think they ran too hard. Obviously, there's a lot of volume accumulation on this. They're generating $2 billion in cash flow every year. They have almost $6 billion on the balance sheet, no debt, and they're currently valued at I think 28 or 29 billion. So if you're thinking about from a macro perspective, inflation is sticky and it's going to be around. What you're looking for is free cash flow monsters, right? And free cash flow monsters, this kind of fits the bill. So I know it's been choppy and it's been crap in terms of price action. It fails at every point in time, but I like this one because long term, I think it continues to build, right? In less than 10 years, their entire market cap now will be covered by the free cash flow that they have. So
I think I've spoke lovingly of mine plenty of time, right? It's Amazon and Lisa Su. That's my 1 and 2, and then Microsoft's my third. Those are my favorite 3 longs. Nick, you're a little bit different. I don't know that you've ever spoke so glowingly or lovingly of holding anything with the reverence that GP and I do. Maybe I'm wrong. Maybe you can teach me something new today.
I aspire to be if I could, I aspire to be the style of trader that holds positions like years. I'm not there yet in my journey. I'm always gonna trail stop positions. So I'll never my ego is too fragile to handle a round trip style trade, especially if it's a monster winner.
Yeah.
So
round tripping on you is fun. I'll tell you that. I've been fortunate enough to get out of some of them, but
I don't mind.
Dude,
I don't mind
trips,
talking. Oh, go ahead.
No, I was just saying I'm the round trip king with Tesla. So
yeah, I just my stomach, like I said, my stomach's not there. And the way that I kind of got into the financial markets was like a short-term from a short-term trader's kind of perspective and kind of point of view. So I don't mind talking positions, but I do find that as like a purely technical trader for the most part, sharing and talking about positions, I feel like is a hex.
Yeah.
Like I don't know. Like I
So,
could be long today, I could be cash tomorrow, I
Yeah.
could be, whatever. But
Well, that's the reason why we like having the conversation, right? Because we all do things a little bit differently. And that's not to say that one way is right or one way is wrong. It's just what you feel the best at and how you can manage your own positions, right?
yeah, totally.
So it's all great to be able to learn those things.
But we can talk about, like, to answer Zach's question, we can talk a little bit more about long-term kind of views and positions.
Oh yeah.
While also being a trader, right? Like,
Yeah.
'cause that's what I'm trying to do. I'm not always successful at it. But trying to have one account that's short term and then another one that's long term, but also watching the drawdowns happen in some of these things. It's not the easiest track record. It's a hard kind of balance. Do you hold it? Do you sell it? Do you, like, because technically you're looking at things like, oh crap, this is going to break down, I should probably sell this. And as an investor, you're like, well, am I going to be missing the forest for the trees, right?
Yeah, totally.
So we can have that conversation. We can actually dedicate a show to it at some point in time. But
Yeah.
so, like,
Probably
more
a big difference too in someone that, like, when you it just from in my mind, like when you take a more of an investor stance, you have a much more in-depth and clear idea of what the fundamental package looks like. Where when it comes to like a technical trader, technicals are more or less an art, and we're just trying to use it as kind of like a roadmap by saying like, okay, I see where price is kind of moving and where the energy is kind of resonating, and just kind of trying to like not have a bias, but kind of allowing like the trend to kind of dictate your bias, right?
Yep.
So
it's giving you the probabilities for the best entries, right? Like in terms of like long-term patterns. Like as a technical trader, I'm looking at a long-term pattern. I'll give you examples of the one that was successful, which is Tesla, right? When it came back to retest 6-year lows and it held and it moved up higher, it was your key moment to get long. And obviously Tesla went on to do some crazy stuff. Not saying that all stocks will do that, but we're in the cycle where everything came back to test multi-year lows, right? Amazon's one of them. So if you're looking at like a long-term pattern, it's interesting to see that happening as the volume to come back to retest it wasn't that high, but the volume at the retest is pretty high. Like, and if you look at Tesla for an example, the volume of distribution wasn't crazy high, but when it came back to 190, 180, pre-split, twice pre-split, it's when the volume started to kick in. So if you're looking at like technical patterns, that gives you an opportunity to be long, right? So my example was when that happened and held, I actually sold all of my Apple to buy more Tesla, which wasn't an easy decision at the time. But when I looked at the technical pattern, I'm like, oh, that's cool, that's holding. What's it doing? Oh, it's technically acting like it should, right? And I looked at it from a fundamental perspective. It's like, which one has more room for growth from here? At that point, I think Tesla was valued at like $30 billion and Apple was already in the trillions. So I'm like, if Elon executes well, this 30 billion easily turns into, a 60, 70 billion. I never thought it was going to do what it did, but
closer to $1 trillion though.
Yeah, right. Like, no, I just thought of double, right? Like, I didn't even think it could do what it's done. So
I'm not saying it would go. You would have thought it would gone to $1 trillion, but it would be closer to $1 trillion than what Apple would be able to make on top of its trillion, basically.
Yeah, exactly. So that was my decision so that, like, when we're talking about stuff. But if we're talking about long-term positions, one that caught my radar, thanks to a Twitter follower, Joe Kunkel Option Talk, is Global Foundries, right? GFS.
Yeah. Semi.
his post got me reading their investor day, and like if you guys are looking at stuff that you want to be long term, this is kind of what this is a new IPO. It's forming a base, and I've talked about this a lot, right? I don't buy IPOs ever. I wait for it to at least base 12 months, 18 months, whatever. The thought process there is the first 12 months is the initial venture capitalists trying to cash out, and they're trying to cash out as much as they can. Look at HKD. Sorry. Right. Like this is what happens to new IPOs with low floats, right? It just goes bananas. So I technically don't buy. If the company is executing, then they'll execute long term, and this is what you kind of look for. Look for IPOs that have matured 12, 18, 24 months. The longer the base, the higher the space, as they say. This has been IPO'd for what, 2 years now? A year and a half or so? And reading their
investment. Some D-Lo.
Yeah, same thing. And then DigitalOcean, DocN, and stuff like that. So what I'm looking at now versus getting long like Amazon and Google and Microsoft is some of these plays, because new IPOs with bases have more potential over the long term than I think Google and Amazon do, because they're still big companies and they're still growing, right? Amazon accelerated revenue last quarter from 116 billion to 121 billion, so they're still there, but their growth days are behind them. So what I'm looking for now is things that have IPO'd in the last 3 to 5 years that have solid bases that are starting to execute and have long-term winner potential on them. So that's
where I differ a little bit, right? As you know, I want that consistent earner, right? I'm less like, yeah, having my money go 2x is great. Who wouldn't love that, right? But I try to say, okay, I want roughly 75 to 80% of my positions into things that's just going to be constant earners. So the Amazons, the Microsofts, the Apples, the AMDs, the NVIDIAs, right? But then I have my 20% or so of, I'm not going to say it's full speculation, but that 20% is basically just, all right, grow as much as you can. And I'm okay with holding on to the Apples and not selling them for the Teslas. I'm okay to, adding to or potentially even starting a Google position, which I was looking at earlier this week, or this past week, was starting Google, because I know it's going to be a consistent earner, right? And I'm okay with that. I'm okay with, my money not being in that potential to round trip, right? I mean, I was in a Roku trade for a long time that, man, I wish I'd sold out even closer to the top than what I did, as opposed to down where I ended up selling it. It was still free shares, and I still made more than 100% profit. But like Nick was saying, like, that kind of makes me queasy seeing that happen. The biggest free position I have on right now is Cloudflare, right? Net. And Net's been like, it's been a wild trader, man, from, coming up from $200 down to 45. Granted, I'm in the low 20s with it, but at the same time, it's like, man, I could have exited up at 200 of all of it as opposed to half of it. So anyway, there's some.
I just don't have the stomach for that. I mean,
that's what I'm saying. And so it's a small piece of my portfolio as opposed to the 80% of my portfolio that I'm cool for it to be, just keep marching along, just keep doing your thing, and just keep, making money.
And all the stocks that you talked about that are consistent all had their periods of crazy moves. Yep. And so I guess the point I'm talking about here is, what are the future winners, right? That's what the identification process here is like. You might have those moves. Amazon sure had those moves, right? 90% off the .com crisis. Like, it had some crazy moves. Netflix, after, what was it, Flickster or whatever, they 75, 80% move, and then you went on to miss, 10,000%, right? So I think that's me for like trying to identify new market leaders and stuff like that, because the cycles are the same in the markets. People do well for 20, 30 years, and then they get not necessarily comfortable, but people start to like, I'm a little tired of Amazon, I'm a little tired of Google or whatever, right? So you start looking for those kind of, that's personally where I am.
I think too, like you have a lot of, I think this is like, I think we're going to continue to see like a very stock picker-esque type market where, yeah, you're right. Like good numbers are going to be rewarded, but I don't think I don't think necessarily bad numbers are going to be. And you have a lot of people out there, like in this type of correction where we've seen names getting slaughtered, like 60, 70, 80% plus, we're getting the only reason that I would liken it to like 2008 is that like all of the charts are resetting. So like all of them, like you've got to let pretty much everything go stage one base and like basically sit around and wait for a stage two to start. You catch a stage two and you're basically getting like a long entry circa like, let's say 2000, I don't know. I'm not looking at the chart, but like, let's say 2009 to 2010. So you're getting it like, yeah, I don't know what my point or where it's necessarily going with that, other than the fact that like you've got a lot of people that are doing a lot of like hunting for like the next like real leaders that are going to be out there. We
won't know till 20 years from now, right, Nick? Right? We're not going to know if we're right or wrong, but you have to kind of shoot your shot. Is my philosophy. So, but and you got to take the chances, and you got to find the ones that I think are founder led, are founder owned, are fully committed, right? Like I was talking to someone about this, I think last week, is like, if Gates had just held his position at CEO and he diversified as soon as he left, right? He started investing in random ass stuff. His net worth would be 3 times or 2 to 3 times Elon Musk right now if he just held all his Microsoft stuff. So like, like if you're thinking about conversations here, right? Like is like if he spent 20 years, he's worth like about $120 billion. He'd be worth close to 500 billion right now, right? If he just held his Microsoft stock, and as soon as he started becoming a diversified, he maintained his wealth, but he also didn't get that kind of reacceleration.
I think this is a great conversation right now because there's a lot of diversify. But if you look at like even Warren Buffett, right? Like he's not diversified. Most of his holdings are in like 4 stocks. I mean, most of his is Apple. He's got a big position in Oxy now. It's Bank of America and Coke.
Yeah. Yep. And Coke has been his leader, right? Apple became his leader recently, but Coke is since the 90s for him?
He made something like $300 million on the last dividend from Apple.
Yeah.
Right. So, I mean, believe me, I think, balance in a portfolio, at least for me, is important. But I'm really heavy tech. I'm really heavy semiconductors. So I'm not really diversified. Like I know the sectors that I want to be in and I go in on them, as opposed to like, oh, I need a drug stock and I need industrial and I need, healthcare. Like, fuck that.
Yeah. Everyone's got their different school of thoughts, right? Dags.
Yeah.
I think it's really interesting to take a look back at history and see diversification versus concentration, right? And all of the guys, right? Like I understand that they ran their own companies, so they have their kind of futures ahead of them. But Bezos, Elon, Gates, like these guys were all, even if you look at Kinder Morgan, right? Kinder Morgan, the guy owns like, I think 60% of his stock, right? And he doesn't take a salary, but he pays out dividends every year. And his dividends are like $400 million, right? Like it's kind of nuts in terms of what these guys do. and I thought the stat of Gates just holding Microsoft would have made him the richest man on the planet is just hilarious, right? Like,
Yeah, well,
his
I mean,
diversification actually slowed his roll.
it's your company, right? Even though you're out of the company, you're no longer CEO or running it, but it's still your company, right? I just, like, again, I'm okay to spread your money around a little bit, but we're going to bring it back to Kathy with the last 5 minutes. I don't understand why you put good money after bad, right? Or, you know, you're selling your winners to double down on losers. Like, Microsoft's been a winner for you, Bill. Like, why do you all of a sudden want to move it elsewhere like that? Unless, you know, wealth and more fortune isn't really what he's looking for, which may not be.
Yeah, and I think that's their kind of next leg in life. Is like,
It's easy to say that when you have $300 billion, right?
Yeah, it's their next leg in life, right? Like, okay, I've made my money. Now let me see. Now let me go explore, right? Like, let me go try the things. Like, oh, let's see if we can send people to Mars. Look at Bezos, right? Like,
so
he's throwing tons of money at Blue Origin or whatever.
He's just like, screw it. We're beating Elon to Mars. We're going. Anyway.
That's the part I think is fantastic when you're thinking about Elon, right? Like, he's got his he's got his quirks, man. I struggle with him quite often, but he's kind of doing it right. He's holding his big positions in his companies that he's running, and then still also pursuing the Mars piece, right? Like, so he can continue to fund his exploration.
Right.
So I think it's interesting to see when you look at concentration versus diversification. What's the quote? Like, concentration makes you rich, diversification keeps you wealthy.
Say that again.
Concentration makes you rich.
Oh yeah, yep. Who said that?
I don't remember who, but I remember it's been a quote that's been floating around a lot, right? Concentration it gets you rich. Diversification keeps you rich, right? That's the one.
Right.
All right, we got about 5 minutes because I know GP, you've got something to attend, and we all have other stuff, so I want to keep it short. This past week, I was going to put some more money to work. I waited on Friday. I actually had orders in for Amazon, Microsoft, NVIDIA, and CRM, and I pulled the Microsoft off to add more Salesforce. But I also liked, as far as news, Twilio, on. We gotta stop on for just a second. Qualcomm, Okta, Tesla. I was going to get back in Tesla. Broadcom, Google, Datadog, Snowflake. But back to on. Weren't we just talking last week? And I'm petty. You boys know I'm petty. I am petty. It was going to go to 60 before it went to 70, or was it going to go? I forgot what the bet was exactly, but I know 60 was in the cards. And our good friend,
dude, he got pretty damn close.
Ogilvy,
61, 66.
He was really hyped up down here at 61. What was the low tick? 61.72. He's like, I want my penny stock bags, and I was like, let's just hold up a minute there, Ogilvy. Anyway,
it's kind of crazy that we were both right essentially in the same week.
Yeah.
He nearly got a 61, and we got our.
Well, he got out of his puts, and that, congratulations on that. That was a nice win for him, getting out of those puts near the low. But yeah, it didn't find that 60, did it? Anyway, I still think on's breaking out, but
yeah. So the quote, by the way, is Warren Buffett. To be he says, I was just looking it up, I don't know if this is right. It's a quick Google search, and it says diversification may preserve wealth, but concentration builds wealth.
Yeah.
Yeah, I mean, every like O'Neill style traders, and like they try to stay within, like, was it 4 to 8 positions, I think?
Yep.
Largely like 2 to 3. Yeah. Anyways.
I'm sure those, like, I don't know much about O'Neill, but I'm sure in those cases they're probably tighter with their stops. if you're that concentrated? Do you know, Nick?
Say that again.
That if they're that concentrated, they're tighter with their stops.
I don't know, but I'd be willing to bet that they probably use I would imagine they use several stops. Like I would imagine that they're trail stopping positions in like probably 3 or 4 different blocks. Probably like below ranges, below major moving averages. And then like the really, really like guys that have been doing it forever are kind of like what's his name? Like you're also just kind of using like monthly moving averages, monthly and weekly, and then you're using like options and whatever else to kind of like hedge positions, and probably not so much legging out via trail stops. But I'm talking about like the Jim Roppel type guys that are in like, you know, probably 3 to 5 positions, and they're fucking loaded into each one of them. Like they can't. They'd likely move the market, I think, if they were kind of getting in and out of like big positions at quickly, I would imagine.
All right, 60 second dash, 2 questions for each of you. First, how do we open? And second, how do we open on futures? Let me clarify. How do we open on futures? And second, higher, flattish, lower. And by higher, that's more than 1.5% on the indexes. Lower is less or greater than 1.5% decline.
For the week?
Yep.
Well, can I just say that I hope we get kind of just sideways to
that's flattish. Absolutely.
I hope we get a flattish week. I don't know if we'll get that.
So what do you think we're going to get? That's what I'm asking. Not what you want, what you think.
No one's gonna make fun of you, Nick. It'll be okay.
Oh yeah, for sure. I kind of think we do see kind of an inside week. You know, like we're like the Qs right now are kind of pinched between, you know, the 200-day and the 50-day, and so I think that we kind of put in like a sideways week. It's kind of what I think.
Flattish.
Yeah. I mean,
that's okay. I'm not going to remind you of Gush this week. Oh, my bad. Not sorry, Nick. Damn it.
You know, Gush is actually looking really good right here. If you're wanting to be long the Gush, you know, you're getting your breakout. You're a breakout above 160. So
we'll put a pin in that. GP. Where how do we open futures and how does the week look to you?
I think we are 5% higher by the end of the week.
Whoa, that's on SPY, Q, or both?
I don't watch anything else but the Qs, man. Every stock I own, you can talk about the SPYs if you want to, but I think the Qs try for 349, 350 this week is what I think. But as what I'm talking about is what I'll be watching is 335, right? 330, that January pivot low. Because if that fails, then I want to see the price action there. Because that's where that's where I'm expecting kind of crazy weird resistance. But if it clears that, I think we're off to 340.
I think we're gonna have a little bit of a mute. I'm kind of with Nick. I think we can probably run up into that area, GP. But I think it's time to take just a little bit of pause for the cause. Let the bears get their breath. Get them. See, we told you it's not going to all-time highs, and then just give them the old ramrod at the end of the month. That
works.
That's what I'm saying. That's what I'm sticking to. Guys, thank you. It's always a pleasure. I love you both. Really. Brotherly love is in my heart for you two men. Thank you. Thanks for always making my Sunday a little bit better, and I hope it makes everybody else's. Thanks again, guys.
We got to do a live sesh. We got to do in-person live sesh. Maybe in Atlanta, Nick.
Yeah, come on down. We got plenty of rooms at the new Bags de la Casa.
We got to do a live one.
we're getting it put together, man. It's been a lot of work, but we're really feeling at home, and I would love to have some people come visit. So yeah, anytime you guys want to come, that would be epic for us to have a truly live session live together.
Good deal. I'll put that on the radar. I've been telling the wife, like, I am just dying for the snow because like I love freaking skiing. So but I'll get a weekend on the Bucks to swing down there. That sounds like a good time.
I would love it. That would be awesome, guys. All right.
Yeah.
GP take off. Nick, thanks again.
Have a
You know
good
where
one.
to find us on the Stonk Twat.